We're recording. Here we go. Well, welcome to the first of many, I guess, official backtesting sessions. So let's do this. I'm going to start with basically some top-down analysis. I've gotten a lot of requests for this, and I think that it's really foundational to kind of decipher the market. It doesn't really matter what timeframes you operate on. I would suggest if you want to keep notes, it might be worth it, even if you're getting the recording, so that you can kind of sift through what's important and what's not. So ultimately, what I think is going to be invaluable is timeframes. Personally, I'm using the 15, the 5, and the 1. I use the 4-hour maybe for 30 seconds a day. I really don't care much about the 4-hour because I'm a session trader, and that's going to be reflective in my trading. And we're going to go over all that now. So let's do this. So 4-hour, I mean, really, in terms of like market structure and stuff like that, what it boils down to, and it doesn't matter again what time frame you're on. This low right here created this high. This low right here failed to break this high, which essentially means that this low will more than likely be weak at some point or another. And what that means is, obviously, we've broken a demand level that's broken a few different supply levels. We are coming down. We're now expecting to respect supply and then kind of roll over and more than likely target equal lows. Exactly. So yeah, I mean, in terms of like, this is, fractal. It happens on every time frame. It's not different. It's not unique on the 4-hour, but it does tell a part of the story. So yeah, that's basically it. So guys, if you can just remove your drawings, I don't know how to do all that yet. So if you're drawing right here, please remove your stuff as you're doing it, please, and thank you. Or not, whatever you guys want. If you want to keep it there the whole time, I'm not going to fuck around looking for it. So that's what it boils down to. If you want to keep it there, by all means. But okay, remove annotation, people. Come on, please. Not asking for much. Okay, let me see what I can do, because apparently this is getting out of control here. Okay, guys, listen, if you've annotated on here, you need to go and erase your stuff. I don't know who is doing it, but you need to erase your stuff. Sweet. You guys are awesome. Okay, well, whatever, it's staying there. Like, I mean, it's gonna be really ugly for your fucking recording. Okay, so really, let's basically back this up. I can't believe I'm doing this right now. God damn it. I can't sit here and look at that. Erase. Let's see if I can erase it. Okay, I can. Guys, if you don't know how to use this fucking tool, then don't use it. Please. You're wasting, like, honestly, I will kick you, because I don't have time for this. There's people here that actually want to learn. So if you don't know how to use the tool, do not use it. Simple as that. Okay, so in terms of the 4-hour, I know that we're reacting to some sort of 4-hour demand zone here. I'm sure a lot of you guys have this marked. By the way, this is EU, and this is the only thing I'm going to be backtesting. Simple as that. Okay, I don't trade anything else. I don't really give a shit what's happening on GU. If you trade GU, good for you. Go fly kite, do what you want to do. It's not for me. This is what works for me, and same principles will apply to GU as well. Let's go like this. Okay, ultimately, this is what I'm looking at. Okay, so right now, I'm going to draw all this out in a minute, but what I want to do is backtest the Friday session. So if you guys look in the bottom here, you can see 8 o'clock. Let's go to about 7:30, just before market open, for at least the New York session. And what I'm looking at is really this. Okay, I'm going to draw all these in a little bit better in a few minutes. But really, like, we've broken structure at this point. So what I'm looking at in terms of the 15-minute is, okay, well, if I want to backtest the session, really the next area of supply is going to be more than likely in here. Correct? Very, very, very simple. Where would the next areas, in your opinion, I would like you to use the annotate tool only if you know how to use it, and also erase your own shit. So what I want you to do is tell me where the next level is. Exactly. So thank you, Reese. It's this wick. Does it mean that we are going to reverse from it? No, but it does mean that there's more than likely resting orders sitting in it, which is going to produce a reaction that we can trade. Now, there's also, exactly, so that's the extreme. I would consider this kind of like the decisional, depending on what terminology you use, totally up to you guys. But in terms of targets, obviously expectational order flow right now in terms of the 15-minute is we are making higher highs, higher lows, and more than likely we are going to, like, really supply should have held from this level right here, because this is the origin of the move that produced that. So what we're expecting is this level right here is toast. Like that's plain and simple. We've broken supply levels on the way up. You know, this is technically the structure point that we've broken. So what I'm looking at is, am I going to mark this out? For sure. Is it going to be that valuable? Well, you know, yet to be determined. So right now, what I want to do on the 15-minute is just literally mark this up as if it was like 7:30 a.m. New York session on Friday the 13th. Okay, so here's what I'm going to do. We are going to, I'm just going to try to zoom this in a little bit. We've got this inside bar that's sitting right here. Okay, you know, whatever. Everything is subjective within the market. This is, I'm showing you how I mark it up. Okay, so right now I'm marking this out as supply on the 15-minute. And personally, what I like to do is work my way down to the 5-minute and refine these levels. Okay, because we're counter trend, I'm not really expecting, like I said, for this to potentially break structure. During the Friday session, I was expecting it to break this level and then potentially see a break into this. However, I'm going to show you why I was wrong a little bit later on. Excuse me. So right now we can look at that. You know, this guy right here, this inside bar that's sitting right here, I did notice a lot of people sending me markups and stuff like that. This is not a key level. This is not going, like, is it going to have resting orders in it? I mean, potentially. I have no idea, but realistically, the one is right here, because this is where we really broke a demand level, where these kind of wicks were. But ultimately, like even this one is like, I mean, if you're going to pick this one out, this is the extreme of that move. This is the origin of the move that fueled this entire thing, okay, in terms of 15 minutes. So does it not seem more realistic to map this one out even instead of this one? But you could mark both, but you would definitely not mark this guy out. I mean, you know, there's unmitigated supply here, but you're not expecting that to hold. I mean, ultimately, yeah, we could come up to this level. Of course we could. However, this is the move that started this move, right? So that's essentially what I'm looking. And again, I don't swing for the fences on trades. I'm looking to see reaction points. I'm looking for attainable levels within sessions. Okay, so you know, could this be mapped out as well? Of course it could. Absolutely. There's unmitigated supply sitting here. I wasn't even expecting us to go further than this. We ended up achieving this on Friday, but what I'm going to do is just kind of map this out in terms of how I would look at it. So really, this is what it boils down to. I mean, you could have this entire candle here. You could refine it to the wick. You know, it's really, really subjective when you get into these kinds of things. But ultimately, let's just map out the candle so that we understand what's going on. And then when we zoom down to the, zoom in rather to the 15-minute, we're going to be able to, the 5-minute, we're going to be able to really see what price is actually telling us. So let's do that. And then let's also just kind of map this guy out here, which is really the move right before the volume kind of kicked in. So I don't traditionally use you know, precise order blocks with the up move before the down move. What I'm doing is refining to the move right before volume kicked in. That's the way I do it. I don't really care about order blocks. I care about supply and demand. Okay, I understand that they are correlated together in certain regards. However, I think that understanding where markets really acquire volume is far more important than you know, quote unquote finding order blocks. So that's how I look at it. It is what it is. The indicator for is IB V2. Can get confusing sometimes if you don't know how to use it, but it is a invaluable tool in my opinion. So thanks for everybody answering over in the chat section. So let's go down 5-minute. And what we're going to do now is very basic. We're just going to really refine this, all of these levels. So you can kind of see here, that really the move before the volume was exactly what created the break of demand. So if you think about this in terms of supply and demand, so demand kicked in here, it produced this high, right? So technically supply is in control of the market here. But now the problem is all of this shit is mitigated, right? So really there's no resting orders in here, which is good for a price to go up, right? Because if we have a series of mitigations, what does that mean? It's usually going to get ran for liquidity because there's no resting order sitting in here, which is going to give us cause for higher price. So when we start to see the change of character down in these levels down here, it formulates a really, really great narrative to be able to take these higher risk reward trades. So right now, I mean, you could refine down to this guy, you could refine down to the wick. You know, tomato, man, like ultimately it depends on how you like to do it. Personally, I think I would probably take the wick on this, but you know, for argument's sake, like let's just take this guy. And the reason I want to take this guy is because it is that up move before the down move that where everybody kind of looks at as an order block. So let's just leave that there. Really, it's like what is the difference here? It might be a difference of a pip, or maybe not even a pip, a 0.8 of a pip. So let's just keep it like that. Keep it simple for now. Okay, so moving forward, let's go over to here. Let's look at what's going on. Very simply put, you know, you could again really you could take this wick because the entire wick wasn't mitigated, or a good portion of this wick. You know, I don't necessarily take the 25, 30, 50, 75% of the wick. Essentially, what I'm looking at is that we've basically swept equal highs on a lower time frame here, tapped into some sort of mitigation up here, and we have kind of somewhat mitigated this, but ultimately what I'm concerned about is this move right here, right before volume kind of kicked into the market and swept liquidity to the downside. So that's really what I'm concerned about. It's about refining, and really it's personal preference. So there's no right or wrong way, I don't think. You know, my way is better, of course, just kidding. But yeah, it just comes down to personal preference on you know what you're going to do to really analyze the market. So going up to the last area, which is you know, this area here, very simple. We can kind of see you know, this inside bar, this really dragged out inside bar that was sitting here. I don't know, might have printed a little bit different on different brokers and stuff like that. But this is the data that I have available right now. So with a range this large, mic off. Seriously. Okay, so yeah, essentially what's going on here is because this range is a little bit too big for me, I personally, I'm looking to refine this. So I'm going to go right down to the 1 minute and be able to have a more refined target. So let me just kind of go out like this. And what I want to do is go down to the 1 minute. Bear with me for a second. I know this is really, really painful to watch, probably super cringy, but I just want to go over and refine this properly to be able to formulate a decent analysis. So, I mean, again, could you take the wick up here? Yes. Could you take this wick? Could you like do whatever you want? I mean, ultimately, it's about taking profits. At the end of the day, I think that really the down move before the up move before the down move that really showed us any kind of volume was right around this region. I mean, you know, arguably you could have used this. This has already been mitigated. That fueled this move. This has only been partially mitigated. We're not looking for some crazy reversal from this area. We're expecting a pullback to potentially take longs from this area. This would be known as that supply turning into demand. We've got liquidity. Thank you, Pete. You know, doesn't mean it's going to hold. Okay, we got all kinds of equal highs sitting here that are likely to get swept. But I'm just trying to set attainable goals while being in the session, because let me tell you something, 11 o'clock Eastern Standard Time, as soon as that hits, my stops are getting rolled to break even and I have hard take profits. Where am I setting them? I'm setting them at I'm setting realistic expectations in order to make sure that week after week after week, I'm in profit. It's as simple as that. Don't complicate things that don't need to be complicated. Don't swing for the fences. Then all of a sudden you're coming down like this. You know, we're tapping into a demand level, seeing some sort of a change of character. You're monitoring under here, and then you get swept out. What does that do to your psychology? Well, now you're looking for another demand level to potentially get in because you're chasing a trade, and you don't even realize that the market's now against you and you're taking supply trades. So just be smart, take profits off the table. profits pay the bills, man. That's all it boils down to. Okay, so let's go back out to the 5 minute. Basically, we have all of our markups done for the session. Obviously, it happens a lot quicker than this when you're doing it. I'm also trying to narrate and really give you some insight on how how I look at the market and why I do it in the fashion that I do. So I am first going to go over how I traded this, and how I traded it the first time was actually having this guy, this inside bar set up right here as well. So I'm going to map this out, and the reason why is because it's a really good example to show you, ultimately what not to do and how to not overanalyze the market. So overanalyzing in terms of like, every unmitigated supply level doesn't need to produce a reaction. So here's what I'm going to do. I'm going to put this across like this. It's really ugly. I know there's way too many supply levels, but I want to show you exactly what I was looking at doing here. So, okay, there we go. We got everything on here. 5 minute is dialed in. Now it's just a matter of, okay, well, we've broken above this, right? This is a break of structure here, if that's what you'd like to call it. Really what it is as soon as we start breaking above. So immediately while this is happening, my first thoughts, just go like this, break a structure top. My first thoughts are, okay, we're going to likely pull up. We're going to see this achieved and this supply level achieved. And I'm expecting to see some sort of a, change of character, breaking demand levels on the way down, and then swing for the fences, tons of built up mitigations, all this fun stuff to basically take price down into the abyss, down low. So that was what I was expecting. Why I was expecting that? Well, I have no fucking idea, to be honest with you. And really having any kind of expectations for the market is exactly how you get yourself caught in positions like what I was in. So the problem, and let me reiterate this, the problem is when you assume something is going to happen, it becomes your narrative. So when you flip the script and you say, okay, well, if the market is showing me this right now, what are the available trades? Now, the available trades would be taking a long into here, okay? If we break structure like this, then we would be taking shorts down into, let's say this was unmitigated demand. So it's all about reacting to the market. It's not about having any kind of projections. It's about finding areas where you can essentially take trades from. And I know that's really silly to say, but I think a lot of people just they're sitting here doing these lines and expecting all these crazy things to happen. And dude, just play what is shown right in front of you. That's what it boils down to. So let's move forward. Let's jump on the 1 minute. Hopefully that's enough to really kind of get us moving here from a top-down analysis kind of standpoint. Is there anybody who's not followed? Like if there's a question on how I've broken this down, do not cue your mic, but I want you to just type it in the chat right now. I'm going to give it 30 seconds. I'm going to have a drink of water here. If there's anybody who just doesn't understand what I just did, now would be the time to just kind of chime in so that I can address it. Yes, I will be mapping out demand zones. However, my demand zones will only be on the 1 minute. And the reason why is because pro trend on the 1 minute right now is bullish. So in order for me to, really take any kind of demand trades, I need to find the most recent demand levels to trade from. Why not a refinement on the 1 minute? I mean, these are POIs. Because I'm going against the higher time frame trend, I'm looking to essentially take profits into POIs. I'm not looking for refined order blocks unless I was taking positions. Does that make sense? Do you ever take entry on the 5 minute? Very, very, very rarely. We'll save question. Like, guys, this is about, do you have a question about the top-down analysis? This is not about my entries. So do you do that then on the 1 minute during the session? Do you always have a higher time frame POI on the chart? Always have. Just my higher time frame is the M15 refined to the 5 minute. That's the bottom line. So listen, that's enough for questions right now. I'm going to keep moving here because there's people waiting. What do you look for before taking any trade? I mean, dude, that's the whole idea of what we're doing here. Mohammed, unfortunately. So mark 15-minute zones. and then refine to 5 minute. If the 5 minute candle is big, then one refinement. Exactly. That's the simplest way I can put it. Do you use premium or discount from the 4 hour? I do not. I don't care about the 4 hour. Do you always mark out only unmitigated POIs? Unmitigated POIs are the only things that are POIs, in my opinion. Okay, that's enough. Sorry, guys. I'm going to keep moving here. There's people waiting, and I want to get through this in 2 hours, possibly less if we can. So essentially, what I'm looking at this point is very, very simple. I mean, we're looking for a break because we're getting so close to, you know, an area of interest or a POI, you know, point of interest, whatever. Essentially, what I'm looking at is, like I said, I kind of had this script where I was expecting to see, you know, some sort of break of structure. So when you have these ideas in your head to begin with, it starts to really taint what's going on and your perception of the market. So let me show you what's going on. So really, once this high breaks right here, ultimately there's a supply level sitting in this wick. What I'm thinking about in real time is as soon as we break that, we're going to leave behind demand, and demand is going to be in control from right here. So let's just see what goes on. Okay, so you know, this is not the demand level. The demand level has been formulated from here. Now, if we would have done something like this and we pulled back and then broke, this would now be the demand level. So it's these little subtleties. I don't even find them subtleties. I think this is ultimately common sense as a trader. You know, supply is in control from here. If we pulled back from supply but failed to break demand, and now we've created a new demand breaking this level, this is your demand zone. Okay, it's called a supply to demand flip. Okay, so that's yeah, anyways, that's for another time, but really this is a backtesting session. So if we start playing price, right now, technically you could have an order in this region right here. And that would be that. So soon, however, now, once we start playing price through, the second we tap into this POI, I cannot, and I repeat, I cannot be looking for demand trades. Why? Because if we react from supply, which is the start of this wick right here, you know what that tells us? That tells us that in the short term, supply is in control. It does not mean that it's going to outweigh demand, but what it does mean is that it's potentially going to produce a reaction, which could then you know, respect supply again, and then break this demand zone right here, which would cause a change of character, right? So the other option would be that, okay, we see this, we push through, and now this demand zone is the new valid area. So it's all about formulating the narrative and reacting to the market, okay? So right now, we cannot have any trades on demand. We know that demand is in control in terms of expectational order flow. However, it's really going to depend what happens within the realm of this supply zone, okay? So let's move forward. So we start pushing through. This is a good sign. Okay, we get a wick to the top side right here. A lot of people are looking at this level as demand. No, demand is in control from right here. Okay, this is the move that created all of this. Okay, and if this again would have pulled back, then the demand zone would be here. So we'd be looking for a break of structure here. But right now, in order for us to have any kind of bearish sentiment, we need to break this to create supply. Okay, now on the flip side, if we did something like this, swept above and then broke this demand zone, this is the demand that created the break of structure, which then we've swept to the downside, which means supply would be in control from here. Okay, so it's just every time a candle prints, it's literally a new story. I know that's so silly and abstract to kind of say, and it seems so, you know, sentimental in a way. It's really not. It's just every single time a candle prints, there's ultimately another story being told. And I'm also pretty crazy, so there's that. Equal highs, okay, boom. I'm looking at equal highs. At this point, what I was looking at, and again, this is I'm basing this analysis off of the trades I took, or the one trade I took last week, and then we're going to redo this backtesting session with a new lens afterwards. So let's look at this. Let's play price forward. We've printed equal highs at this point, and you know, like we're failing to break below or above this. So what does that mean? Very, very simple. Where do you think the next weak spot? You guys can annotate. If we fail to break this high, what's the weak spot? Done deal. That low is going to get ran. Very, very simple. Cool. So right now, equal highs, demand. So what does that mean? If we fail to break above this, this low is going to get ran. That doesn't mean it's a break of structure though, right? Okay, so let's play. And okay, there's the low getting ran. We've swept below. This is some sort of a demand level in here. If you took a trade off this, congratulations. You're a fucking idiot. It doesn't mean that it won't work out, but I don't know what kind of rules you follow. So right now, supply is in control from right here, right? So really, if we tap into supply, realistically, we should see the break of this low. That's what it boils down to, right? And ultimately, if that's the case, this demand level right here is still the one that's in control. So let's play price. We react to supply, okay, and then we push through. Here's our supply zone. Again, we've tapped in, and we're just trying to read the devil in the details. So there you go. We've basically reacted to a supply level, but it doesn't mean that we're taking a sell from here. It means that we're just consolidating within this range right here. So what we're looking for is very simple. We need a break of this, or we need a break of this in order to even form up a trade. Hopefully you guys are on the same page with me, but that's what I'm looking at. I don't care if this gets respected. I am not looking for trades off of this because this isn't a really valid level of supply at this point. So let's play price. Okay, we run the high. So what does that mean? If we ran this high where supply is sitting, that created this low point, where's demand right now? Done deal. I hope that makes sense to everybody, because this demand level no longer matters. And you'll notice something that's really interesting here. And this is, again, where perspective of the market really, really shifts. And this is how I view the market. This is where everybody would be looking at a break of structure, okay? This is not necessarily structure. I guess it is to a certain degree, or certain degree rather. The biggest thing you need to understand here is that supply was in control of the market from here. We produced a low and then broke supply, which now leaves us to think that demand is now in control of the market from here because of the break of supply, not the break of structure. Okay, so technically this is a structure point that's sitting above this high, but if you think of things in terms of supply and demand, and you trade supply and demand concepts, you are doing yourself a disservice by not looking at this order block being broken. Okay, so ultimately right now, with a Y or an N, put a check mark beside whatever one you want. Could you take a trade right now with this candle on this position right here? The correct answer is yes, okay? And let me explain. So the reason you could is because it's 100% yes. So get rid of your drawings, guys, please. Same people as last time, same fucking line, same this. Jesus Christ. Oh, bear with me, guys. I'm gonna have to go over here and annotate. How do I get rid of this shit? Jesus. Okay, get rid of this. No, that's me annotating now. That's good. Okay, clear all drawings. Okay, there we go. Stop fucking annotating if you don't know how to use it. Okay, so look at now. What I'm gonna do is go like this. Make sure that I'm on my mouse. Okay, so the reason, and for reasons that I just explained, supply was in control of the market from here. Okay, we pushed lower. So if this was on, like, let's say a 15-second time frame, which I don't use, I don't even have access to because I only have a pro account. Ultimately, this is structure from here to here. So because we broke that structure, we've basically mitigated supply on the higher time frame. In this case, the 5-minute. Okay, would you agree that if we're in supply, if we're sitting in this supply zone, okay, this big red zone right here, we should very simply break this demand if supply was in control? Yes or no? 100%. Fucking simple. Super, super, super simple. Now, if this was a 4-hour chart, you guys would all get this right. But because it's the 1 minute, everybody thinks it's a noisy chart. It's not a noisy chart. It does the same shit. So if you look at this right now, demand is in the market right here. We broke supply. You can literally sit here, but sweep could happen. Well, if the sweep was going to happen, I mean, this is okay. So let me back this up. because I'm getting a little bit carried away here. This should be in the second analysis. This is exactly what I was thinking. This is exactly what I was looking to happen, was a sweep. Now, here's the thing. Because supply is technically, we'll call it in control at this level, it's very simple. Supply should have fucking taken out demand. That's the bottom line here. And if it didn't do that, then that means that demand is actually the one in control from this level. So I was expecting a sweep. And the reason why I was expecting a sweep is because my emotions got the best of me with these equal highs within this level. So let me show you what price did, okay? Keep in mind, demand is now in control from here, right? Let me, I'm actually gonna box this off nice. Sorry for my messy highlighting, I guess you could say. So let's breach this demand over. And ultimately demand's in control from here. So let me play price. Okay, perfect. Look at the wick. I am looking at this and I'm going, you know what? This is sick. I'm going to be able to post this in the Telegram. I'm going to catch the top of this and I'm going to let this thing fucking melt for a 40-hour day on Friday the 13th. How ironic, I'm thinking I'm the shit at this point. So I'm watching, I'm not taking a trade yet because ultimately what needs to happen for me to take a trade is we need to break this demand, right? So that I can take a supply level. Very simple. That doesn't happen. So what happens is now I see equal highs forming again. I'm like, perfect, here's another sweep. So now I'm looking for a potential change of character like this. Not necessarily looking at this wick, but I'm looking at the origin of the move that needs to get broken, okay? I'm not hearing. Why do you mark the first candle for demand, not the last candle? Well, I'm marking this guy right here. This is the one I'm marking. Okay, I'm just saying that demand last entered the market right here. It doesn't mean that this is where it needs to hold from. The origin of the move is what needs to hold, right? Okay, so again, the narrative here is equal highs, relatively equal highs. I am looking for a sweep and potential breakdown. And the reason why is because we're in a supply zone and my ego is absolutely inflated on Friday for whatever reason, okay? Boom, I'm like, okay, here we go, we sweep again. Okay, equal highs again right here. This is literally what's going through my head. I'm like, fuck, man, I need to hit this out of the park. It's Friday. I just want to crush it. And boom, I get the reaction. I'm like, yes, this is fucking sick. It's starting to move forward. Where's supply and control? It's sitting right here. Okay, so as long as we crash through this, then I can put an order on this, right? Because this is no longer demand. This is where demand was in the market. So you're not expecting demand levels to hold down here, right? You might see a reaction to it, which would give you a demand to supply flip. But that's essentially what was going through my head. So I married my bias and, rule number one is don't have a bias. Just trade what the fuck you see. That's what it's all about. Excuse my language. Okay, supply sitting in the market here. Essentially, if we do this and then come down, then supply is in control from here. So because I am looking at this from a supply standpoint, here's trade number one that I missed, okay? This is demand. This is a break of structure, if you want to call it, but ultimately it's a break of supply, okay? This is trade number one. Where's the target? Very simple, next unmitigated supply. Where's that? Right here, right? But really, if you remember, this inside bar right here is actually nothing. And I'll just go back out to the 5 minutes so that you can kind of see this, because we're actually going to take this off. This is not structural. This is just garbage, nonsense, substructure bullshit. So let's just get rid of this at this point, because I want to show you now moving forward what the proper methodology was to. Why doesn't it matter? Because it's not in an extreme. It's not like there's no order sitting. It's halfway through a leg. On a 5 minute, or sorry, on like a 15-second time frame, it might show a bit of structure kind of thing, but like it's not relevant to the way that we're trading with my strategy, at least. It's a pause in the market. Thank you, Dora. Exactly it. It is more of a pause than anything else. Hopefully that makes sense. So anyways, let's flip the script here at this point. And the reason why is because I think you guys can see that equal highs, the sweep, ultimately this sweep right here should have broken this, okay? So I was on the wrong side of the market mentally, not trading it at least that way, but ultimately as soon as we saw this, we were able to say, okay, well, this is not going to be a sweep. May not have been that clear on the 1 minute, but if you would have went out to the 5 minute, you could have seen very clearly that this is a push away, okay? So, oh shit, here we go. It's because I keep doing undo, redo. There we go. Nice. Okay. So let's go like this and just delete this stuff here. Okay, so it just shows it a little bit more clear. Haha, class, I see you, Infanta. Yeah, so anyways, to make a long story short here, the equal highs are not getting swept. And if you just looked out to the 5-minute time frame, you would have been able to see the clean break and just giving you a little bit better insight as to what was going on. So I guess we'll kind of back this up. And this is where I wanted to basically show you what's available every single day while trading. Like this is Friday, you know what I mean? Like Friday, there's really like, I usually don't even trade Fridays unless there's really, really good setups. I'm not trading them. So at this point, once you see this breakout like this, you know, you've kind of got liquidity obviously resting beneath the low. Here's the sweep, here's the push. You know, ultimately, you should be able to put an order on here. Let's see what I was seeing. I like clear on the 5 minutes, see break zones, I mean, okay. Yeah, so would you guys, okay, yes or no? Could you at this point, yes, no, put an order on this block and target this block? Yeah, of course. I mean, simple. And you know, the market is literally this simple. And that's like the craziest part about all of this is we get so wrapped up. Okay, stop annotating, please. The market is it's so hilarious how we kind of view the market sometimes and feel so victim to it in terms of like not understanding what's going on, and the 1 minute is so noisy and this, that, and the other thing. Well, realistically, you'd be an idiot not to have the market or an order on this, because we've literally proven that this supply zone could not break any demand. And now it's very simple. In order for us to have any kind of supply in the market, we need to go up to here. So why not make money on the way up, right? Instead of waiting for some POI on a 4-hour, looking at the impulsive bullish market, we can risk to enter a trade. Absolutely. So stop loss, I mean, totally up to you guys. My brokers typically, you know, 0.5 pip, sometimes 0.7 pip spreads. But anyways, that's always on the buy side. So this is essentially what you would be changing is your actual buy entry. And then on short positions, not to give you a big lesson on this, but ultimately your buyback position is up here. So this is where you would add your spreads. Okay. Oh, shit. Okay, so ultimately you could put an order here. You know, if you want to just cover the low, realistically, we should never go past this. So you can keep a nice tight stop loss, 1.6, 1.7, whatever you want to do. There's a 1 to 11.5 sitting right here. Okay, so let's play price forward. And okay, so ultimately we're tapped into a trade. It's, you know, ultimately, like, you need to read the market for what it is. This is no longer a sweep. I was on the wrong side of it mentally, but we're not expecting supply to hold. So now ultimately what you're going to have to do is map this guy out right here, right? This is the last point in which supply was really in control of the market that kind of broke this substructure, whatever you want to call it. But ultimately, as soon as we break above this, okay, could we not take another demand level trade? As even if we don't break this top, yes or no? 100%, easy, all day. You could take this all day. You would not have to break this high. You would have to break this supply level. That's it, okay? Because supply would be in control of the market from there, okay? Body, this guy, I don't know what you're asking, but anyways, let's move forward here. Mouse, awesome, okay. Now play price and see what's going on. So, I mean, we get the push away. Okay, we're essentially changing hands here, because you have to think about this on a lower time frame. What we're doing is essentially moving down, and then we're having some sort of a change of character, right? On, you know, 5 second, whatever it might be. Again, I don't use it. I use the 1 minute, 5 minute, and 15. Keep it as simple as possible. I got too much other shit to worry about while I'm on the charts. So here you go. We're starting to push. Let's just map this guy out here. This is the last place supply was in control of the market. And we get the break. So at this point, everything looks relatively efficient. Exactly. Reese, you're on it. You're a phantom guy, I'm pretty sure. Very, very simple. Like, I mean, there's the inside bar. Now, this is where things get a little bit subjective, and I want to just shed a little bit of light on this. And the reason why is essentially this doji right here has come in and mitigated a portion of this inside bar, okay? So if you think about this, to a certain degree, this has been mitigated. So what I'm looking for at this point is, okay, well, what caused this to break up here? And if there's nothing on the 1 minute, It's very simple. The only other time frame I can look at is the 5 minute. So if I look at this 5 minute, you can see the inside bar, okay, which is the white candle here. And ultimately what I'm looking for on this is, okay, well, this is the candle that essentially right before the momentum's kicking in. However, because this has been partially mitigated, I could just very simply go like this, right? I mean, the wick has not been mitigated. So when I look on the 1 minute now, you'll see that this ends up being the inside bar, but it just gives you further confluence to build the narrative as to where demand should kick into the market from. Because there is obviously a little bit of mitigation here, it's all about really formulating what's going on, and sometimes it takes 1 or 2 different timeframes to further understand these little details. So hopefully that's helpful for you guys. But I mean, to make a long story short, again, right here, ultimately all I'm looking for is another trade. Why the hell wouldn't I take another trade up to the supply level that's unmitigated way up here? And simply put, I don't need a break of structure in order to take this. And the reason why is because we've already broken this inside bar supply level, okay? Sorry, what are you saying? If the market returns, yeah, what about that one? I mean, ultimately, again, you have to use 2 timeframes here. I mean, this, could you use this? I mean, it's up to you. Really, I'm just showing how I look at it, and ultimately that's what the whole thing of this webinar is showing you my perspective, right? Could you subjectively say that this is it? Sure, but this didn't break structure. The move right before the break was this move right here, and that's formulated from the 5 minute. So that's what I'm looking at. Just piecing together the, you're welcome, Yorick. Thanks for asking, man. Okay, so would you agree that very simply, we could easily go to that level? And the reason why is because this is ultimately where supply would take control of the market if it had the chance to. This has already been mitigated by this wick. No good. You see it? This wick right here has already mitigated this inside bar. So your higher time frame is the M15. You only look for M15 below. And sorry, what are your criteria to define M15 POY? And could you show how you manage this trade, for example, regarding the break even and partials? So yes, I will show you all of that. That's the whole idea behind this. We are pro trend on the 15, the 5, and the 1. So in a pro trend trade, personally, my management is pretty open and it's pretty loose, and I'm going to show you why. Because in order for us to see any sort of reversal, okay, and I'm going to be shutting the chat down just for a second. Don't bother asking anything right this second, because I'm just going to address this. Ultimately, the whole idea of this POI, okay, if you think about this, why would you need to take partials, or why would you need to monitor under substructure if you know that the only place that supply could kick into the market, of course, if there's no news, would be this level. So because there's resting orders sitting here. So why would you take partials any sooner than that? And the reason why is, if you think about, guys, I don't want to name drop or anything like that, but there are guys within the community that are absolutely insane swing traders, where they're looking to take their partials is where we're taking our hard take profits. And the reason why is because ultimately, when we tap into here, we're going to produce a reaction that's going to cause the break of supply that I'm going to re-enter. And that's the only difference, is instead of holding a trade for 80, 100, 400 R, whatever it might be, all the power to these guys who can do it. I don't have the bandwidth to manage a trade like that. I have shit to do, and that's why my trading style is the way that it is. So hopefully that clears things up. So we're going to talk about management here in a minute anyways. So here we go. We've broken above. We don't even need to, again, we don't even need to break this level because we've broken the supply, right? So I can keep this order here for as long as it takes. Okay, so let's move. We created equal highs. What do we know about equal highs? Usually going to sweep and then come crashing down, right? So this is where things get kind of confusing. So once we broke through, you know, a lot of people looking at this as some sort of you know, supply to demand flip right here. That's just simply not the case. And the reason why is because supply was in control of the market here, not up here. We've already partially mitigated this block, right? So these are the little details that you need to be able to pick out for yourself while it's actually happening. So supply is in control from here. Well, where do we break from? We essentially derived this entire move from this leg right here. So I'm still keeping my order here very confidently. And ultimately, I'm expecting to see some sort of a small reaction and potentially come down like this, right? Because there's going to be resting orders in here because of the imbalance that it's produced. So, you know, subjective, I guess. This is how I trade. So apply price. Okay. So ultimately, we have demand in the market right here. So we're expecting some sort of a reaction from it. There's the reaction. And, you know, maybe depending on how you look at the market, maybe you'd be looking at potential break of structure here. I have no idea. I don't know how everybody views it, but personally, this is not a break of structure. This is substructure. This is the leg, right? And if you want to validate that a little bit more in your mind, here's what you do. You go over to the 5-minute. Just kidding. It's not going to work. Go over to the 5-minute and look at it. It doesn't look like there's any demand level in here, and not anything substantial. So that's how I look at these kinds of things. So let's play price, see what goes on. But ultimately, my order is still staying there. I'm now tapped into this trade, and ultimately, I'm not worried about this trade not doing what I need it to do because demand is in control of the market from this level. Hopefully you guys can understand this. Are we at break even on the first? Yes, sorry. As soon as, okay, so this order block right here is above my break even, okay? If this order block was down in this region right here, I would keep this trade so that it was not at break even. And the reason why is because the order block that I would be scaling in on is too close to my break even, where I'm still expecting the market to return to. Does that sort of clear things up? Now, if this order block is up here or where it is right now, this is no problem. This stays at break even without a doubt, okay? So ultimately what I'm doing is as I scale in, so let's say I scale in here, let's say I scale in here, my stop losses are all going to go to whatever the next level is at all times. I am only leveling up my break evens, which in turn is going to lock me into profits here. Now, if I see, and there's a good example coming up, okay, but I'm going to show you right now. So let's say we push up, we come down, and then we start respecting a supply level like this, okay? If we start respecting a supply level, it's very, very simple. I'm not expecting this demand level to hold, so I can manage more aggressively under this level. And essentially, if we break through it, that just gives me opportunity to now take this to this side, to now target unmitigated demand, to then take this back up to the upside. So it's just dissociating your bias and understanding that there can be a temporary change of character where I could just literally lock in some profits, make money on the way down to then make money on the way back up to mitigate the position that we were originally targeting. I know you don't take partials per se, but to go break even, some traders prefer to close a portion of their trade to essentially, yeah, I mean, totally up to you guys. I don't do that. My trading style, it's not necessary for me. And for the reasons that most of the guys that you're talking about that take partials here to cover stop losses down here, this is my hard take profit. So it's just a different trading strategy. It's just a different trading style altogether. Okay, so let me clear this up. Aggressive, but very protective. I really like it. Cool. Happy you like it, man. I mean, it works really well for me. Constantly refining too. You know, what happens today and what happens, you know, in 6 weeks from now, it might be a little bit more refined. But as it stands right now, this has been working super, super great. I've been using this kind of method, I guess you could say, especially pro trend for about 4 months now. So it's been really great. Let's tap into what's going on here. Okay, we get the reaction. So ultimately, very, very simple. I mean, if we break above this level right here, okay, where supply took control. And the reason why this is where supply is in control is because demand produced this. So if we break this level, we are not expecting this to hold because we are producing a reaction that breaks supply from demand, right? So we don't need to see any of these levels up here get broken. And the reason why is because we will prove that supply is not in control. Okay, so I'm going to show you how that works right now. So right now we are pushing away. We have now broken supply. Ultimately, we have a demand level sitting right here. So in terms of our narrative, we could keep taking longs. I mean, depending on the leverage that's on your account, and as long as you don't get a margin call, but really you've got rolling profits that are in here. Could you take partials to get more scale ins? Totally up to you. Could you take every single one of these scale ins if you were maybe risking 0.25% or 1/3%? This is more to show you what's available and understand how to backtest it to basically further your trading ability here. So very simple. Supply was disrespected from here. Demand is in control from here. According to my rules, it's very simple. I put another trade. Why? Because demand is in control from here and supply is in control from up here. So keep taking trades until it doesn't work, right? Or until you see a change of character. But right now, we should have no issues putting these orders on. Okay, and this is the block right here. So let me just like this. So you always do full volume, take profit. Do you explain things very logically? Thanks. Yeah, I mean, pro trend, it's very easy to again, this entire thing, this entire trade idea has been built on the narrative that we need to mitigate supply at these levels up here before seeing a potential for a change of character. So yeah, you would keep taking all of these trades because they all align with the bullish narrative that we need to mitigate this. So, I mean, as long as everything is working out, you're breaking supply levels on the way up, why couldn't you, in theory, doesn't mean you need to take them all, but I'm trying to show you what's available. So each trade you take, you enter in with 1% regardless of the amount of the position of your pair. So it depends on margin. It depends on if I'm getting close to a margin call. Again, I didn't take all of these trades. I took the final trade that I'm about to go through shortly. But realistically, if you're let's say you're an FDMO funded trader, you're risking 0.25% per trade, $250 per trade. Well, you could take all of these because it would literally just be trading your. If you have a trading plan and you're not executing every single trade that's available on your trading plan, then you're not actually following your plan. So that's what this is what it boils down to. If you have a trading plan that requires you to take your trades based off of what's happening on the charts and you don't take those trades, then you're not actually trading your plan. So take that's what we're doing. We're back testing the plan. This is what I'm doing. Done deal. So right now, as soon as this supply level got broken because demand produced supply, which broke structure, done deal. Okay, we're just moving in. We're going to keep moving in and keep moving in until we can't. I want everybody to just be mindful of what time it is right now. So it is 9 o'clock. So this is all happening within 1 hour. Okay, 1 hour of New York. It's taken me an hour and 4 minutes actually to articulate all of this. So yeah, I mean, scale in. Why the fuck can't you scale in? Keep going until it doesn't work, right? So boom, we literally missed this by like a 0.1 of a pip. There's nothing there. So as soon as we break, ultimately, at this point, I'm looking at structure, and the reason why is because we need to see some sort of, something that we could take another trade from. So let's look at this. Let's remove this order because obviously we haven't been tapped in, and it looks like we're going to break this supply zone sitting right here. So if that's the case, okay, exactly, Reese. So could you refine this to the wick? I mean, this is totally personal choice. I would probably look at taking this entire zone like this, factoring in this wick and this wick. Now that we've had the break of structure, provided that we don't tap into this level before retracing down to these levels, there would be no reason to not keep this order on, okay? So guess what? Scaling, again, here's the opportunity. Here's the criteria. Everything meets the criteria, so keep taking them. 1 to 6 or 1.6 pip stop. Like it's up to you depending on what your spreads are. We'll leave it at 1.8, let's say, just for the hell of it. Let's go like this. Here's another 8% trade if we get tagged in, of course. And then we start to push down. Okay, what are we doing right here? We are creating liquidity, cause for price to go up because, ultimately there's nothing here, right? This is the reaction to that inside bar. I'm pretty sure the 5-minute inside bar, that was like the pause in price. So let's go like this. Let's bring this down like this, and we'll keep playing price. Okay. Okay, so let me just move this over and do this. So no, it's not supply because this has already been partially mitigated by this wick. In terms of supply, really the only place is going to be here, right? Exactly. So this is where I formulated the actual trade. Well, this isn't an SD flip. We're still in bullish territory, right? This is not where demand is in the market. Demand is in the market from down here, which broke structure, right? So yeah, I don't know how, like, I don't know how much more simpler I can put that. So keep playing price here. Okay, so if this right here, okay, if this right here broke with more than a wick, okay, you would use this as demand. Okay, if we had a closure above this level, you would without a doubt use this. But because we close with a wick, that is not a break of supply. This could easily be a sweep. Exactly, exactly. So where is the valid level of demand right now? Can somebody show me? 100%, 100%, 100%, 100%. There's no ifs, ands, or buts, man. This is irrelevant. This is a sweep at this point, okay? So let's play price. It doesn't mean we're right. It just means that, like, logically, this is the only place that demand could step in. Okay, boom, we get tapped in, perfect. So at this point right here, because, sorry, I should have said this a little bit earlier. As soon as this breaks, this is at break even. And the reason I can move this to break even is because demand is here. I would not be putting my stop loss here because technically we could wick below it. However, it's one of these things where, you know, break even is more than enough. And if we produce a reaction, then we can start to monitor, because if we get closer and closer to this, the closer we get to this is the more aggressive I'm going to start managing. So I'll show you that in a few minutes once we actually get to that level. So let's play price. Okay, we get the push away. So this is essentially the break of supply that I was talking about. And this is where I ended up taking my first trade on Friday. So very simple. Where is, yeah, done. Exactly. Very, very simple trade. You know, if you missed everything else like me for whatever reason, you're busy, it doesn't matter what the reasoning is. We were looking to get into the trade right at this level. Could you factor in the wick? Could you only take the wick? Honestly, it's totally up to you. But if this is your first trade of the day, chances are you're going to keep it a little bit wider because you want to get tagged in. Ultimately, you want to get tagged in. So because we broke supply, hold on, let me just get this order on here. Okay, stop loss just below here, 2 pip stop, and then up to the same level, right? So let me just move that over. Okay, so ultimately, like I said, you know, we did not have to break the swing high in order to get into this trade. What we needed to see was this little detail where supply created this low into this demand, which produced a break of this supply, which now we're looking for trades here. I don't see a break. How is that a break? This is a break of supply. Do you understand, Ali? Exactly. Because we closed above, exactly, because we closed above it. Cool. As long as we're on the same page here, that's all I'm after. That's awesome. Berto, yeah, okay. So I'll deal with questions after. Let's just get through the rest of this session here. Okay, so does everybody agree that you could keep an order here after breaking this supply? Yes or no? Cool. Get rid of your stuff, guys. I don't know who was saying this again, but this has already been mitigated by this wick. This is going to be ran for liquidity because there's no resting orders. You have to think about this, okay? If supply is in control from this level right here, we break structure and we tap into it. What does that do? It facilitates this break of structure, okay? What happens here? Boom, we tap into this supply level to create this low, right? Now, ultimately, supply is in control from this level right here. So like you could say this, You could also look at this wick if you really wanted to get fussy, wait for this to break, and then all of a sudden put your order on here, okay? That is ultimately your, I guess you can call it your break-if structure is right here, or even right here if you're more aggressive. So at this point, we're just waiting to get tagged into the trade. Now, okay, so we got tagged in. Let's just move this over here. Now I'm waiting for this to kind of, you know, tap into this level up here. Now I ended up taking this up to this region here. And the reason why is because exactly what I said prior, if you guys remember at the beginning of this was the decisional area. Typically, we want to see something tap into the extreme, like we just had a huge push. You know, was this a greedy move? I don't think it was a greedy move. What I was expecting to happen was to tap in and then potentially see a pullback where I could have managed under. Or, like I said before, if we pulled into this and now all of a sudden we've gone down and we start respecting a supply level, then I manage under here because I'm expecting this to get ran, and then we get on the short side of it and then start taking it to the downside, right? So it's the relentless pursuit of adapting to market conditions, okay? So having a imaginary take profit up here, which is essentially what I had, and playing it out in a way that, okay, you can trail it. I don't have a specific rule on my trading plan that I know of, at least, or that I can think of right now, that says that there's certain circumstances where I trail stops and there's certain circumstances where I just go break even. It's all circumstantial, and every single time that the market presents itself in a different way, the variables change. So I'm going to show you how I manage this in just a second, but for this one, I end up coming up to here, and let's just kind of move price forward from here. Okay, so we're tapped in. At this point, every single one of these trades is at this break-even level. So whatever I'm locked in at, let's say 3, 2, 1, you know, maybe 8% locked in right at this level. Okay, hypothetically, of course, because I like I said, I didn't take all these trades, and the reason why is because I had the mentality that all the way back here from this level way the fuck over here, I was expecting a sweep and looking for sells. So because I was late to it and I was married to a bias for whatever reason, I ended up missing out on a lot of really, really good trades. I mean, 8, 14, and 11, so 25 and 8, 32, 33 are just sitting here. And if I would have just taken this one to here, that's another 7. So there's 40 R sitting here in 3 hours, just on the 1 minute, everything based off of the 1 minute. So play price. Okay, so we start to tap in, and I mean, it's really simple at this point. I mean, you can see how easy it is that, okay, we've not even produced a pullback at this region, right? So how do you start managing this? Well, here's the thing. You could manage, you know, arguably you could look at this and say, you know, like we shouldn't go lower than this, but I don't like to live on shouldn'ts. What I like to do is let the market do its thing and just understand what's happening based off of the reactions from the market. So ultimately, until I start to see a pullback from whatever region, whether it be my take profit getting hit first or a pullback that actually gets put into the market, I can't even consider managing this yet, other than being at break even, because ultimately, if you think about this logically right now, can you guys map where demand is in control from right now? 100%. 100%. So it would be very difficult to follow a set of rules in accordance to scale-ins, because ultimately we broke this from here. So would you agree that if you were to scale in right now, where would you put your scale in? The logical area to put your scale in would be down there. There's no ifs, ands, or buts. Does it mean we need to go down here? No. But it does mean that the logical area to potentially put a scale in would be there. If we produced a reaction here and went like this is where demand is in control from, okay? I hope that's clear. fuck, man, sometimes I don't know if I articulate these things in an effective way. I'm hoping this is really sinking in for a lot of you. I was hoping to backtest the whole week, but it turns out we're probably only going to get today done. But that's kind of cool because it's like I said, it's way more detailed this way, way easier to understand the narrative that I've really fabricated at this point. So demand is in control from here. I guess you could say decisional demand is in this region here. Okay, so we're not really caring about scale-ins at this point. We've broken our supply level. We are hard take profit on about 30 some R at this point. And what I want to do now is start pushing through. Okay, we start to see, oh, is this the whole strategy or is there more? This is not the whole strategy. I mean, this is backtesting. You know what I mean? Like this is hindsight kind of stuff. You know, I wish I don't even have my trading plan beside me right now. It's upstairs. I was working on it. But like my trading plan is about 6 pages long of text. And there's a bunch of different diagrams for criteria and stuff like that. So this is not the whole strategy. This is definitely a good part of it. But it's, man, there's way more details that I don't really go over in this. But I mean, dude, keep notes. That's what this whole thing is for. So right now we're producing equal highs. What does that do? That creates cause for price to eventually sweep into my hard take profit. So it's good. That's exactly what I want. So ultimately, what are we looking at right now? Well, this is the demand level. We should not break this. So really what I'm expecting is more than likely something like this. At this point, this is exactly what ends up happening. I know this trade inside and out because I've played it over a few times at this point. But you know, you kind of see this. We don't actually tap in. You could have put an order here if you're ballsy, but ultimately demand was always in control from here. So we're getting close to the end of the session. You know, 11 o'clock. I'm not looking for scale ins past 10. So 10. Well, you know, in and around 10 o'clock, which is right here. This is kind of where my last trade, 10:15 sometimes. You know, but my general rule is 10 o'clock. I'm not looking to enter any more trades past that point, but I am looking to manage my positions up until about 11, you know, 5 minutes to 11. And then from there, everything's getting rolled over to break even or closed out manually, depending on where we're at. This is not the strategy, but that's how the market moves every single day. Let's learn the market. That's exactly what I'm trying to illustrate here is I'm showing you how this machine works, because let me tell you something, I'm going to stop right now before we get too far into the management portion of this. The market is a very mechanical machine. It does not care where your stop loss is. It doesn't know where your stop loss is. It knows how to do one thing, and it gets magnetized to do this one thing. And what is that one thing? It is to collect orders. If there are more orders here than here, which one are we going to go to first? If there's more orders here than here, where are we going first? It's simple. We need to collect more orders. The market doesn't care. It literally just has the one job. And all it does is do that over and over. It's fuel. I mean, it seeks liquidity. Like that's it. There's nothing more to it. So when you understand what the market is trying to do in order to facilitate expectational order flow, you can make a fuck ton of money in this area. Okay. So that's the whole thing. It's really, really simple. And it's a really easy machine to understand. But the second you introduce emotions, this is where things get very, very scary. So let's play this out. Actually, I need to set a reminder to talk about so conscious. Literally need to write that note down because versus sub. Okay, we're gonna go over that in a second. I think I have my emotions surgically removed last week. Yeah. 8 to 15 probably. Okay, I'm not doing the questions right now. Okay, so right now, really, once we start rolling up like this, like I said, because we're getting into 1030 territory, it's time to manage. Okay, like ultimately that's what it boils down to. I'm not looking to leave profits on the table or potentially lose profits. I need to lock in right around this region, 7% on the day. Dude, people don't do that in a year. So I'm more than happy with rolling my stop loss or take profit over to that level. So we get a reaction. So ultimately, right at this point, we start to produce reaction ultimately at this level right here, this wick, right in this level right here. This is essentially where demand is. We're kind of seeing a reaction to that. We're not expecting supply to hold at this point, especially with equal highs sitting here and the higher time frame supply sitting up in this region. But yeah, once we start tapping and pushing away, very simple, everything gets put to break or to just underneath this level right here. And ultimately, if I was holding all of these trades still, this would be my first management that I would really be doing, other than just moving them to the next trade's break-even level. I laugh like Jeff Bezos. Okay. Have you guys heard the Jeffrey Bezos? Oh, I'm sure you have. You guys are probably all much younger than me, but the Jeffrey Bezos song on TikTok has me dying. Okay, let's keep pushing through here. And yeah, so management is there, guys. Push it through. I mean, ultimately, here's where supply is. If you saw a reaction, technically, I guess you could trade this, provided we didn't tap into supply first. And I mean, this is it, man. Like, we're at the end of the session. End of the session is here. So we got about 10 minutes left. And anyways, we create the equal highs. Like, dude, there's so many things going for the trade. It's just a fantastic way to view it. We tap into the inside bar, fuels this, ding, ding, ding. Exactly. So I hope that's helpful. Okay. 11 o'clock, I do not hard take profits. I don't have to hard take profits, is what I should say. What I do need to do at 11 is move everything to either break even or to a structure point, which is right here, okay? Because ultimately, this right here, this demand level created this, okay? Now we're in supply, like we're in dangerous territory for a potential break of structure or change of character, however you want to formulate the narrative for this, but ultimately we are at risk. So at 11 o'clock, I'm break even, I'm locking in profits on whatever ones I can, and then also just setting hard take profits and just let them run and don't think about it, because ultimately you're inputting parameters so that you don't have to think about it. That's the whole idea behind it. Let me just go over to this question section for 2 seconds. You trade 8 to 5, but do you prepare like at 7:30, mark charts and think? Okay, so here's what I do, okay? I go to the gym early. I leave the house. My girlfriend and I leave around 5:15. We go to the gym until about 7:15. We're there for about an hour and a half kind of thing. And come back, coffee, let the dog out. 7:45 is usually when I'm jumping on. I do not allow myself to take any trades until 8. I have my markup. It only takes 5 minutes to do markups. I'm only utilizing 3 timeframes. It's really, really simple. And when you trade only one pair, you know exactly what's going on EU all the time. And that's the beauty, is just sharpen your sword on one pair, right? Keep everything as tight as you possibly can. But yeah, 8 o'clock is when I'll execute first trades, usually shortly after. But in terms of when I get on there, sometimes it's 7:30, depending on how quick we get back from the gym, 7:45. But ultimately what it boils down to is I rid my charts of all drawings at night, literally get rid of everything, reanalyze in the morning. I don't have a bias this way. Dude, it takes 5 minutes to remark up your charts with this kind of strategy when you're more intraday, utilizing the 1 minute. So yeah, that's basically it. So last thing I want to talk about, we're getting into about an hour and a half now. We're not going to quite go 2 hours in terms of back testing, but I do want to open up for about half an hour to maybe even an hour and ask you, or basically have the floor to ask a bunch of questions and hopefully be able to answer some. So just hold off for a few minutes, guys. I'm going to open up your mics in about 10 minutes or so. So the last thing I want to talk about, and I think this is honestly when I had my largest breakthrough within trading, was conscious mind versus subconscious mind. Okay, and this is a really interesting, like anybody who's taken a one-on-one can vouch for this. I don't know if any of you guys are here right now in the chat, but I talk about this all the time. So your subconscious mind is kind of where your emotions lay, and this is where things get tricky, because a lot of the automated things that we do are programmed into our subconscious, like making or trying to make rational decisions. So whether it be management, whether it be entering, whatever it might be. But the problem with the subconscious mind is it doesn't make a lot of its decisions based off of logic. So what I actually do, and this sounds crazy, but I love it, and because it works. Bottom line is it works. I narrate exactly what I'm doing right now during this session while I'm teaching or just delivering a message via Zoom to all of you guys. I do the same thing while I'm trading. I talk to myself. I literally will take, pretend this entire session is exactly what I'm doing during my New York session. So right now, in terms of management, you know, like I'm looking at this, I'm saying, okay, well, we have equal highs here. So what I'm going to actually do, I've got really, really neat, tidy, you know, annotations and stuff like that, you know, with equal highs, liquidity on the top side, different colors. But I will talk to myself in the context of understanding what's going on. It takes 1 minute for each of these candles to print. You got lots of time to figure shit out, but it's all about talking it out. And the reason I like to talk it out is because when conscious mind and subconscious mind collide, this is where indecision kind of lives and it breeds. And anxiety and basically everything that is kind of a paradox between emotions. So I know that's deep. It's meant to be deep, though. It is exactly this, in a sense that you need to be conscious during the session, especially if you're a session trader. So the only way to do that is to, for myself at least, and take it with a grain of salt if you'd like, is to literally talk out what's happening in the market. And one of the best ways to do it is to literally talk out every candle. What does the candle mean? What needs to happen for me to switch my bias at this point? And understand every single possible scenario for you to get into a trade. Because ultimately your job as a trader is to get into trades. And if you understand the narrative, or you create the narrative that the market is displaying to you, I'm telling you, man, it's going to change the game. It'll change the game for anybody who is a session trader. So I'm just going to go over to questions, just what's in the chat really quick. Logically asking and talking to the market why it's happening. Exactly. So when you question what the market is, essentially the market is delivering to you. And when you start to ask questions about why is it doing this? Where does it need to go to collect more orders so that we can get a scale in, we can get in on a change of character? It's insane. And like, you know what, if you live with family, loved ones, girlfriend, boyfriend, whatever, you know, fuck them. Honestly, fuck them all. Do what you need to do, because I'm telling you, trading, there's nothing in this world that makes money like trading. It's insane. And if you can get on the right side of the market because of the narrative that you can produce, it's end game. You're never going to work again. That's the bottom line. I'm not going over August 10th. Sorry, Taffy. You know, ultimately, we're in the point of, you know, we're an hour and a half into this. I'm going to open up the microphone. So what I want you guys to do, you're going to get one question each. Okay, that's it. And don't ask me to go back in time to a specific date. What I want is stuff that relates to what we just talked about. So I believe there's a way to raise your hand, if I'm not mistaken. I don't really, yeah. Let me just see here. More reactions. Yeah, I don't really know, to be honest with you. I hope there is. Can somebody confirm if there's a way to raise your hand in the chat? Okay. If you can just type it, how to do it, and then if you guys can just start maybe raising your hands, and I'll try to address questions. You know, okay, I see them now. Okay, so listen, I'm going to start here. I'm going to unmute Jamie Boyd. Just bear with me, guys. I'm so sorry. It's yeah, I'm just an idiot. I'm pretty spent. Jamie, you have the floor if you want to talk.
Yep, can you hear me?
Yeah, man.
I'm just wondering, mostly, what do you look for on the 15-minute? Like, is it a change of character you're looking for to then take trades in that direction, or what are you mainly looking for on the 15-minute to give you your direction?
So ultimately, like, the 15-minute is if I'm like, counter trend in the case that, like, so right now, obviously the 15-minute is pretty heavily bearish, but we're pulling back, right? So ultimately what I use the 15-minute for is POIs to take profits. And then ultimately, if I see a change of character within these levels during the session, then ultimately I know that I'm aligned with the higher time frame, which means I can swing a little bit harder for where I'm actually looking to take profits on the pro trend trades.
Oh, okay. Yeah.
Does that make sense?
Understood. Yeah. Thank you.
Thanks, Jamie. Okay, I'm going to move on. Guys, I can't see how many times you raise your hand, so please, like, just be credible. You know, there's going to be all kinds of these. One question per person, please and thank you. That's all I'm asking. Be fair. No other questions. Raise your hand if you have. Okay, here we go. Ask to unmute. Okay. So, yeah, Alfonso. Yeah, how are you, man?
Yeah, what's up, man?
How are you?
All right, so we're good, thank you. So, all right, our question is, once we had our one-on-one with you, we understood that we only took a trade as soon as we broke the high. So the question that we asked ourselves was, what caused higher prices? Do you remember that?
Yeah.
So, yeah, so as after this Zoom session, we understood that we don't need to ask ourselves what caused the higher prices. We just need to ask what caused the break of the most recent supply, right?
And yes, exactly. So it's a refinement, right? So when we first talked, and I hope it's not to call me out here, but essentially, like, you have to ask yourself, when demand comes in control, like, let's say right here, you know, when supply was in control, it was in control from this level, which essentially is a structure point. So this is the high point, right? But you could refine this down to this level. So you need to ask yourself, what causes that break? Exactly. So this was what caused the break.
Okay. All right, cool. Awesome, man. Thank you.
I hope that's not too confusing, man.
No, yeah, so that was the most, like, question that we had, because we battle tested this, and sometimes our demand zones didn't hold, or supply zones didn't hold,
right?
And we were questioning, like, why, and now we understood, like, and then we were questioning, like, is this a low high? Is this a low, like, demand level, or maybe it's a weak supply level, you know?
Gotcha.
So
and it all, like, look left too, right? So if we're in a demand level and we're producing that change of character like this, it just becomes a lot more high probability to be able to get into the trades too, right?
Right. Yeah.
Cool.
Awesome, man. Thank you.
Thanks, Alfonso. Elise.
Hey man, it's Ali. I did a one-on-one with you.
Yeah, man. How are you?
The one that's moving to Toronto.
Yes, sir. What's going on?
Good, man. I hope you're doing well. Thank you for this. Honestly, you opened up my eyes. Like, cool. This was one of the best $7 I've ever spent. Trust me, I'm sure everyone agrees with me on this.
I hope so, man.
So my question, honestly, is that, so when you get onto the charts, I know you do your you analyze the charts around 7:30 to around 7:45, and don't get into the trade around 8. Mm-hmm. Like, I always end up getting, like, taking the wrong side of the trades when I first get into, you know, the charts and everything, because I feel like, oh, the 15-minute is bullish right now and we're heading over to this POI, but I don't know, sometimes it just reverses on me and I get confused. So knowing when you're bearish onto the, because you were saying 15-minute is your higher time frame.
Yep.
How would you be able to know that, okay, we're now going to this POI, or we're going to reverse here?
So I think, you know, one of the things is, you know, if you look down in this level right here, this was a POI that we had mapped out right from the beginning of the session, right?
Yeah.
So this is what I mean by, like, here, hold on, let me just go like this and zoom this up a little bit bigger. You'll be able to rewatch this, and I'm sure the answer is going to pop out at you the first 10 minutes of this webinar, because that's kind of what I went over. But what I will say is, in order for us to see, like, you might have been looking at something like this for a short. And here's the thing is, yes, we're in a supply POI, but until we break this demand level, it's impossible for us to consider taking shorts, because demand has been in control from here until we until we actually break this supply level, right? So it's just a matter of a lot of times sitting on your hands and really waiting for the market to show you something clear. And the only time it showed something clear was when we broke this supply level and ultimately took out this structure point, right? So getting caught on the wrong side of the market either means you're premature and you're not actually following through with your rules, because a lot of times too, you're looking at wicks or you're looking at inside bars for breaks of structure, and ultimately what fueled the entire move into this level was down here. So we would have needed to see this break. And what a lot of times what I find too happens is you're so focused on waiting for this to happen that you miss out on exactly what I did Friday, and you end up missing out on all these moves, right? Because you're so married to a bias. But here's what I can say, okay? Never go into a session with a bias. Trade what is available. If you had to take a trade, okay? If you had to take a trade when you got onto the markets at 8 o'clock a.m. Eastern Standard Time, what are the available options? What would the market have to do to make a trade available for you?
Yeah. Okay.
And as soon as you just, so look at, I'm actually going to take all this stuff off very quickly, because it's a good question, man. And I think a lot of people have this same question. And, I question it sometimes too. There's a lot of times where I get in the market and I'm like, fuck, I don't want to be on the wrong side of this, but it happens. Yeah. So ultimately, hold on here, let's go like this. I was expecting this to sweep. And why? Because we had equal highs. But in all fairness, if we're in a higher time frame, POI or supply zone, where ultimately we're looking to potentially take shorts from, it's very simple. This level, the second we tapped into this, should have produced a reaction that broke structure.
Okay.
Right?
Yeah.
And if not, then it's just a matter of saying, okay, well, what would a bullish scenario look like? And it's very simple. It would probably sweep lows, break supply, and then break structure, which would cause us to get in, right?
No, that definitely makes a lot of sense, because sometimes, like, what I usually end up, like, I see over here, you have this demand here, right? Where you took this going higher. But like sometimes I'll put a trade here, but all of a sudden it will just end up going all the way down. Now, would this mean that, okay, you will have an order, or are we shifting the trend now? Like, are we now going bearish? And then you'd wait for that POI and then take it like that? Is that?
Well, I mean, exactly. So if we let's say we tapped into like this demand zone, we produced a high, we respected this supply zone right here, and we broke down. Well, ultimately your POI to get into a trade is going to be up here, right?
Okay.
Because this, and I always think of in terms of supply and demand, because my brain is literally not intelligent enough to fabricate anything more than this. Here's what it boils down to. If demand, when we tap into demand and we fail to break supply, that means that supply is in control, right? So if we break this demand level that's sitting right here now, where did we break it from? We broke it from here.
Okay. All right. That clears up. That clears up now a lot. Thank you.
Excellent. Thanks, man.
Thank you.
All right. Okay. Who else we got here? Jamie Boyd. Does anybody else have a question they'd like to ask? I'm going to give you a few minutes to. Okay. There's a clap and okay. So I'm going to get Nahid. Okay, Nahid, you're not there. My man Dion.
Hey, just a quick question. Whenever you took your first scale in, have you ever had a scenario where your first scale in opportunity, the candle is in the drawdown area of your original trade? Are you, in that case, are you taking that, or are you waiting for another opportunity and kind of just not?
Can you just mark up and show me exactly what you mean?
Well, there wasn't an example in the scale-ins that you were showing here, but here let me.
So I think what you're trying to ask is, okay, let's say my original trade is here, and then all of a sudden, we're going to take a block here, and it comes in, and now it's in the lower part of this area.
Yeah, if the scale-in opportunity, if that scale-in opportunity is in the drawdown of your original trade, are you taking?
more than likely you're on the wrong side of the market, right? It's usually a pretty good indicator that if we're disrespecting demand at scale-in levels, that's usually like the first indicator, in my opinion, where we're potentially going to see a market reversal, because chances are maybe we've tapped into a lower time frame or a higher time frame supply level, which has produced the break of demand on the scale-in to begin with. And if that's not the case, another good indicator might be check the news, because a lot of the times, news does not need to respect supply or demand on the reversal, right? Things happen so quick, but ultimately your scaling should always work, especially at the extremities of the demand or supply level that you're taking them from, because ultimately the bias or expectational order flow should be in play.
That makes sense.
Okay. Thanks, Dion.
Yep. Thanks.
Okay, what else we got here? Pete.
What's going on, buddy?
Hey, man.
Yeah, just a quick one. Something that I'm kind of been struggling with. It's just kind of sometimes I remove orders just before price gets in, and yeah, I know it's a massive problem. I'm kind of just second guessing my analysis, and a lot of the time it plays out. So I was just wondering, like, do you have any tips other than the obvious to just man up and the trigger?
Talk yourself through it.
Yeah.
Like, honestly, man, I know that's like, I wish I had better advice. You know what? I use an analogy. It's really silly as well. I say a lot of really dumb shit, to be honest, but it works. You can't learn how to ride a bike without getting on the fucking bike. That's what it boils down to. So take the trades and keep pushing forward. Losses are part of the game. Ultimately, like, if you have a narrative in your head and you have a bullish and bearish scenario for every time a candle prints, and understand that, there should be no really deciphering. You're moving in sync with the market. You're becoming mechanical with the market. And I think the easiest way to become that mechanical with it is to talk as if you are the market.
Cool. Cheers, buddy.
Okay, thanks. Damian McKenzie.
Hey, good evening, everyone. So just want to summarize some stuff. Probably a follow-up question. So you mentioned that you traded the higher time frame, which is a 15-minute.
Yep.
When the 15-minute head into a higher when the 15-minute head into a POI, it produces a reaction that's usually large enough to trade on the 1 minute and the 5-minute, right?
That's right.
Okay. So say the 15-minute is bullish. Do you like hold the trades full volume based on the 15-minute, or when it's not? So when it's like it hit the 15-minute POI and it's a reaction from the 15-minute, do you do partials on those since it's not from the higher time trend?
Well, so I guess in terms of like taking partials and stuff like that, like I said, like I just have such a realistic expectation, in my opinion, on taking profits. I target areas where orders are going to sit, and that's unmitigated demand or supply on the 15-minute refined down to the 5, right? So when you think about like actually taking profits, like there's no rational reason to take profits before those levels, because these are the only levels that should, in theory, produce any sort of reaction that could potentially break structure and change character from. So I don't swing for the fence, even pro trend. Like, man, I always just target unmitigated demand or supply refined from the 15 down to the 5. And the reason I do that is because I know I'm going to take profits out every day by doing that. And ultimately, if we, like, let's say we come up to a POI like this, we pull back, my stop loss is just underneath here for whatever reason at break even. If we get taken out, it's very simple. It's because there's a change of character happening, and now I'm just taking the short position, right? And now I'm just targeting unmitigated demand. So it's always target unmitigated demand or supply at the first available level from the 15 down to the 5-minute.
So I guess when there's like a reaction from the 15-minute trend, I guess the target would be like a 5-minute or 1 minute unmitigated here.
Exactly. Does that make sense?
Yes, makes sense. Thanks.
Awesome. Thanks for your question, man. Holy shit, we got a lot of people here. Pete, Damian, Russ.
What's going on, man? How's it going?
I'm good, man. How are you?
Not too bad. Thanks for giving us the time.
Yeah. Thanks for being a part of it.
I just wanted to ask maybe some tips or ways to, if a continuation or even an initial trade presents itself and it doesn't fit like your R to R or stop loss? What are some, I guess, ways that you kind of can make it happen?
Okay, so let's say you got an order block. Okay, let's say your criteria is met at this level right here, but the trade. Okay, so let's go like this. So here's supply, here's demand. Okay, you're looking to jump in and get into this trade right here, but it's only 1 to 3.18, right? For whatever reason, and your criteria is 1 to 5. There's 2 ways to do it. Okay, I think the best way is, as long as you know that demand is in control in this situation, just go like this. Just move until you hit your 1 to 5. And the reason why you can do this is because if you know that demand is in control of the trade, chances are we're gonna go deeper into the block than just the entry level of the block. And if you're lucky, you'll get wicked in. And if you're not, well, so what? Then all of a sudden now you have a change of character or a break of structure to the upside, right? You break supply level and it just produces another opportunity. So don't get victimized by missing out on opportunity because it doesn't meet your criteria. But also don't like bend your rules just to be able to get into trades. There's a reason why we have trading plans, and it's so that you can essentially be as mechanical as possible to pull money out, right? Machine versus machine.
Nice. Thank you, sir.
Okay, man. Berto?
Yeah, can you hear me? Hello?
Yes, sir.
Okay, how you doing today?
I'm good, man. You?
Quick question. I'm doing good. So I was trading this session, right? I'll annotate it real quick. So I did take, it's a follow-up question. So I did take this buy, and I was happy because we broke, this supply.
Yeah.
But then what I saw after, I was like, okay, I'm in profit. I'm gonna scale in. I saw this unmitigated, or actually, like what I wanted to see. Well, I guess it kind of did get mitigated, but I did see this level, and this was the cause of the break. And I took a buy here. I lost. Then I guess emotions got the best of me. I didn't see this, but why did you pick this over like this? That's like pretty much.
Well, so supply. Think about this. Okay, I'll get you to just take your annotations off if you can.
Yeah, my bad.
Yeah, it's okay. All good. Supply. Okay. What do we know about supply? Has to break demand, right? In order for supply to be in control, correct?
Mm-hmm.
So would you agree that supply was in control of the market from here because we broke structure from here?
Yes.
You see where I'm going with this?
Yeah.
Okay.
Okay.
Do you have a follow-up?
No, that's pretty much it, because that caused me to be emotional, and then I closed my first position. It ran like 30R, but it is what it is. And I was just like,
it becomes house of cards very quickly, right?
What happened?
I said it becomes the house of cards with your emotions very quickly as soon as you make one bad decision. So, man, going back to what I was saying right at the end before I started taking questions, fuck, it is ridiculous to do, and you're going to look like a fucking idiot while you're doing it, but talk yourself through what's going on. I'm telling you, it's going to change the game.
Okay. I will, because I do try to do that as much as try to like point out every possible scenario, but I appreciate your input.
Where is supply in control from? Why is it in control from here? What's the next demand level that could possibly show a sign of a reversal from that supply? Like, just sound it out, man. And I'm telling you, it's crazy what it does. I don't know how else to put it, because that's just what I do. So I don't know if that's like the right thing to do, but it works for me.
Okay. Thank you.
Thanks, man. Luis?
Yeah, man. Hello.
How are you?
Fine, thank you. First of all, well, thank you for this opportunity. So, my main question is, I'm kind of struggling with, let's suppose in this case we have a demand zone, and a candle mitigates that demand zone and creates another demand zone, the same candle that mitigates, okay? So I have read a lot of times that we never should be liquidity. So if a zone has been mitigated and created another zone very close to it, we wouldn't be trading like just above the liquidity.
Yeah, so like this, okay? Like, let's say there's a demand zone like this, we tap in like this, and then all of a sudden there's another demand zone right like this, right?
Yeah.
You're worried about this being liquidity, right?
Yes.
So here's the thing. If supply is not in control, even though there's equal lows sitting here, there's still demand here. So it's not necessarily going to, is it going to get ran as liquidity? 100%. Is it going to happen right now? No, because if we're not in a higher time frame or any kind of supply zone with this high, then there's no reason for this demand not to hold, even though it's near the other one, because demand still sits in the market here, right?
Okay.
So, and this is, again, where realistic profit taking comes into place, because if you're just targeting unmitigated supply, okay, you're taking this trade like this, come down, tap in, it doesn't matter. It can happen 100 times before we even hit the supply zone, before this gets ran as liquidity, because the expectational order flow suggests a higher high. And what does it need to do? It needs to produce a higher low, right? So as long as you're not, again, kind of talking in circles here, understand what's going on. If we're not in the supply zone and there's no news coming out, I mean, there's no real reason, there's no motive for price to melt off, right? Even though we're essentially at, we'll call it like the liquidity line, demand should still hold. So don't be scared to take the trades. And if you are, and it doesn't fit into your trading plan, and this is a parameter you want to put in based off of your past experience, then just don't trade those zones. Wait for the change of character, or wait for a different continuation that gives you a better opportunity.
Yeah, okay. Also, I'm gonna start to talk myself alone while I'm trading, as you say.
All right, man.
So
Thanks.
thank you.
You're welcome. Anna?
Do you hear me?
Yeah, I can hear you. How are you?
Hi. Thank you for the session. It was very good.
Awesome.
So I would like some kind to say question and consultation how I or many of us maybe saw this, even you, because you say all the time you were waiting for the sell.
Yep.
We had 3 POIs and basically 2 of them were disrespected for sell, to say like that. So this was all bullish from London continuation, and you explained perfectly this continuation, phenomenal. But can I annotate? Is it problem?
Yes, go.
How many of or to say that is the flow of this strategy, how many of us see this is like when price came to this first POI, so many of us would see like this is break of structure, this is break of structure, this is liquidity, to say like that, this. So this would be POI or order block, and price, we would take their sell, and of course we would take an out. So then, like you said, that we would look this as sweep. So yes, okay, so but this is sweep of liquidity. Here we have breaking market structure. Here we have liquidity, order block to take, sell, and we would and
it becomes messy. And here's the thing.
And then what happens? Where is going up or down?
That's right. That's right. I mean, the person who wants to see yellow cars sees yellow cars, right?
Yes, and then we stuck to this sell, and we only see sell. Again, BOS, again, liquidity. And even you said, like in here, where we would be kept, even respect sell. Oh, great, liquidity, sell. And you said even, oh, this is the next POI for sell, because here we had breaking structure, and then 3 losses in a row. So this is where we all make mistake.
Yeah, for sure. And listen, do I get on the wrong side of the market? Absolutely. Absolutely. It happens. So I don't execute a lot of the time on the wrong side of the market, but I will format things in my head that put me on the wrong side of the market. But in order for me to, just going back to this original one right here, and I narrated this exactly how I thought about it when it was happening. Ultimately, demand entered the market here, okay? In order for me to take a sell, I needed, because this is not structure. This is not structure. And the reason this is not...
But would you agree, especially with EU, that would be, not to say late, but EU, many times when it broke, it just melt. It doesn't come back.
I can't.
He's left.
Yeah, no, I mean, it does happen, but ultimately, like really, because we were operating in this higher time frame POI, this 5-minute POI right here, what you have to remember is that, what do we know about order blocks? As soon as we tap into an order block, what usually happens? We melt, right? So we didn't melt, right? Because
Yes.
if we did, we would have taken this out. So what does that mean? It just means that we're mitigating orders. What do we do when we mitigate orders? Well, we run it as liquidity, right? So it's, man, there's only
many
one way
ways to see, and also, but again, I'm always speaking now from sell perspective, and this would be liquidity. This even you probably know for like three drive, so perfect picture, perfect for sell. But
and here's the thing, and it goes back to this, and you know, if you think of yellow cars, you're going to see yellow cars, right?
Yes,
and it is, there's no other way to do it. And shit, I've been saying this almost the whole time. If you talk to yourself while you're doing this stuff,
this what you said. Yes, exactly.
It is crazy how powerful it becomes, because by that same logic, this was supply, right? This is, so as soon as we broke this and we disrespected this entire supply region over here, this should have been game over.
Yes, then this is sweep, this is taking liquidity, this is breaking market structure, this is POI, and and again breaking market structure, demand. So upside down.
Yeah, it's upside down. But here's the
we
thing.
have reason for sell and for buy.
It's all perspective based, but there's logic behind every decision.
But if we talk to ourselves, we could switch. This is
right.
what you say, never marry your bias. I just want to point out what we all have caught up with when market is happening, when price is happening.
For sure.
Like that. Yeah, like you said, you even waited for sell.
100%. 100%. I was waiting for it. And you know what I did? Honestly, I can tell you this very honestly is, can you see me on the camera right now?
Yes, yes.
So this is what I did. At about 9 o'clock, I literally walked away from my desk for 15 minutes because I knew what I wanted to see. And I knew that what I wanted to see didn't necessarily need to happen. And that's sometimes what it boils down to. It means you miss out on 15, 20 minutes of the session. But I'm telling you, when you don't take unnecessary losses, you go back, clear your head, have a coffee, go for a walk with the dog, whatever you've got to do. Just take a few minutes to clear your head, and it's crazy. You'll come back with a brand new perspective.
You're totally right, because you said 3 hours. Some would say, oh, that is not a lot, but when you're on M1, M5, that is a lot.
Look at the market.
You can take 30 trades in those.
There was 40% available on this day alone.
Yes.
With no drawdown.
Exactly. Thank you.
You're very welcome.
Bye.
Bye. AJ?
Hello.
Hey.
Yeah, thanks for the webinar. And my question is regarding supply and demand clip. So let's say we have a scenario like we have supply and price comes to that supply and reacts from that, and then price takes out that reaction, but it is still in the supply zone only. Yeah, the price didn't candle didn't close from above the supply zone. Then should we take a buy from there or not?
I can barely make you out, but it sounds like you keep getting swept out of the market, is what I'm getting.
No, actually, I have a question regarding supply and demand. Actually,
can you just, are you able to, like, is there I can barely hear you for some reason. I'm not sure if it's my speakers or your microphone.
I think there is only my microphone.
How about AJ? How about you type in your I'm sorry, man, I can barely make you out. It's just very muffled. So if you can just type in the chat, and I'll answer it once I finish up with everybody else. Okay.
Yeah. Okay.
Sorry, brother. Thank you.
Yeah.
Nahid.
Yes. Hello.
Hey, man.
Hey, how are you?
I'm good. How are you?
Yeah, I'm fine too.
Good.
Actually, I have a question here. Something. When market is a bullish market and it's touched to the 5 minutes. 5 minutes supply zone, and and when after touch the 5 minutes supply zone, and if it go down and break the lower unmitigated demand area,
yeah,
after that, right there, and last unmitigated demand zone, and if it cross this, and if we find unmitigated supply zone, then we can place a sale, right?
100%. And so I'm going to stop you before you go too far, but let's say this is the exact scenario. Okay, we've swept above the POI. We've broken a demand zone now. Okay, so let's think about this. We've swept above, we've pushed down, we've now broken demand. Supply is in control from here. So now it comes down to this. We're going to look to get into a trade off of this limit order. And where are we going to target? Well, we're going to target this unmitigated demand, because we could easily just be coming down to create a change of character to still take out these highs. So it's just a matter of being realistic with how you take profits. And you know, there's tons of liquidity here. Doesn't mean we're going to come down here yet. The name of the game is take profits out of the market. So if demand is sitting here, this is the first area you're going to take profits, right?
Yeah, right there.
So does that make sense?
Yeah, thank you so much. Thank you.
Awesome, man. Thank you.
Okay.
Guys, we're getting really close. I'm going to take 2 more questions. I'm really sorry if you didn't get yours taken, but like, man, it's getting close to dinner time for me. The recording's going to be up. I'm going to do a Q&A probably later tonight. Maybe I'll jump on Instagram Live or something. But yeah, before I answer the last 2, just want to thank everybody for obviously being a part of this, and hopefully you'll be a part of it moving forward. I plan on doing these every single week. You know, Discord's coming. I'm going to be launching the in-depth masterclass. Going to be $1,000 USD per person. I'm only taking 10 people. If you're serious about doing what I'm doing right now, as well as many other people making a shitload of money off the market, this is essentially the course for you. But yeah, I'm going to leave that for the very end. We're going to take 2 more questions. So I'm going to take Rahim for the question, and then Partha will be the last one. So Rahim, you got the floor.
Oh man, how's it going?
I'm good. How are you?
Well, thanks for the thing again for the Zoom.
Yeah.
I don't know. I'm gonna annotate. Man, I hate to be the one to waste one of these questions. I just wanted to just be refreshed on what was this this order block right here.
Yeah. So here, let me show you right now. So look at this. Sorry, my dog's here, guys. He's saying hello. So think about, okay, let's go like this. I'm going to circle this right here. And when you have congestion on the 1 minute and you're not able to understand what's going on, I guess the question I have for you would be, how would you try to find clearer data on a lower time frame? Let's say you're on the 5 second and it was super messy. Where would you go? You'd probably go to like the 1 minute, right?
Higher. Yep.
Yeah. So what would you do here?
Go higher next time frame.
You see it?
Okay. Okay. Got you.
Cool.
Yep. Makes total sense.
Here's another trick. Okay. Look at this. You see this text right here? Go like this and say, every 30 mins, check 5 minute. Okay. This comes up on your chart right here. Okay. Use these tools, man. I'm telling you, set an alarm on your phone every 15 minutes, check the 5 minute candle, because there's data on the 5 minute that is not available on the 1 minute. And this is how you can get so many fucking scale-ins, dude, if you just utilize those 2 time frames.
Got you.
Cool.
Yeah, I see that.
Awesome. So Partha, you're going to be the last question. You got the floor.
Yeah, thank you, man. Thank you for this session. So much to learn from you.
Thank you.
So I'm really happy. Yeah. So my question is like, if you are trading at 8, okay, and let's say at 8:30, the news, high impacted news is coming. Let's say NFP or FOMC or any kind of like high impacted news. So what would you do? Like, would you go risk-free on your running trades, or would you scale in that time?
No, I do. So here's the thing. So trading news is no different than trading regular days. And I think this is arguably the best question that was asked today. So thank you for asking this. What I like to do is I have a very strict trading plan. One of the rules that I value the most is no more than a 2-pip stop loss at any given time. So as you guys know, during news, it is next to impossible to acquire a 2-pip stop loss for the entire New York session. And the reason why is because it's high volatility. Usually you'll be able to get like a 4, sometimes 5, 6, 7, 8 pip stop loss, depending on how high impact the news is. So to make a long story short, if it's high impact news day, dude, go enjoy your day. You know what I mean? Like that's what it boils down to. But in terms of management, like let's say high impact news is coming out at 10:30 CPI, FOMC, whatever it might be, and you're in trades from 8 o'clock in the morning. There's 2 options. You trail very aggressively, or you just take profits 15, 10, 5 minutes before news comes out. Because really, when news comes out, the whole reason price moves the way it does is based off of emotional decisions on the institution's ends, on the people with the the larger capital, hedge funds, whatever it might be. You don't want to be involved with emotions. You want to be able to break down a chart as logically as possible, and that's my personal experience. And the rule that I've implemented into my trading plan to kind of mitigate this entire thing is if I can only have a 2-pip stop loss, it means that when high impact news is rolling, I'm just out of the market.
Yeah, thank you, man. Thank you for the call.
Awesome. Cool, guys. So thank you guys all for obviously being a part of this again. This is the first, I guess, official Sunday sessions is what we're calling it. And moving forward, next Sunday, I will be allowing the same amount of people, 100 people in to actually partake in the live session. Prices will stay the same for the next few weeks until the Discord is launched, and it's going to be kind of one package deal with tons of different markups, potential for live trading sessions and stuff like that. But we'll go over that in weeks to come. But as it stands right now, every single Sunday, 3 p.m. Eastern Standard Time. This is the time we're going to be doing it. I'm going to set up the signups for Wednesday of this week. And then, yeah, moving forward, what's coming tonight, possibly a Q&A on IG, depending on how I'm feeling. And I might drop the masterclass. We'll see. We'll see how I'm feeling, but you'll have to stay tuned, keep a sharp ear. And yeah, hopefully we'll see you guys on the charts tomorrow. So thank you very much, everybody, and have a great night. The recordings will be sent out tomorrow evening. See you guys.